Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and the data is in, and we have our good friend Orlando Minor with us today. Orlando, sir, thank you for joining us. How are you?
I'm doing good, man. I appreciate you bringing me onto your platform. We've done it again, so I really do appreciate it, man.
Well, I definitely appreciate you taking your time out to talk to our viewers. You have a tremendous amount of skill and insight as to what's going on in commercial. Orlando, let me throw up your channel real quick on YouTube. You guys that are watching, here's Orlando Minor's channel. He has great insights on how the housing market works, and he's a proven investor. He has skills, he has insights. So if you want the truth, if you want to kind of know what's going on, at least in his opinion, go on over to his channel, subscribe. And Orlando, if you can, sir, for our viewers that don't know who you are, can you tell us a little bit about your background?
Yeah, no problem. So I've been in commercial real estate as a lender for about 16 years. I've been an investor for 13 of those years. So yeah, I have a lot of experience. I've done about $500 million worth of loans. So yeah, I've been doing it for a minute.
500 million worth of loans is a lot, man. And are you like a one-man army in your operation, or do you have a whole team?
No, I actually have a whole team. I have an underwriter, guy, production guy. Yeah, so I have a whole team, not just me.
You know what? That's the first time I've asked you that. I didn't know you have your own like staffed underwriter.
I do,
You do?
I do.
You
Yes, I
never
do.
cease to surprise me, sir. And what belt are you in jiu-jitsu, if I may ask?
Oh, brown.
Okay. Okay, so you're an undercover ninja as well. I'm just saying. So
Oh no,
all you haters out there, all right, there's your warning. Orlando, my man, thank you for being with us. Can we just get right into it, brother? Tell me, we were talking on the phone. You're basically giving me the insights, what's going on in
yeah.
commercial real estate. Obviously, you have a tremendous experience there. I lean on you for many things, that being one. Please tell our viewers, first of all, sir, what's going on in commercial real estate?
Well, I mean, there's a lot of things that's really going on in commercial real estate, but I would say the most important for our viewers, right?
Yeah.
Especially your viewers, is that, you know, there's just this oversupply and over construction of apartments. And then we have the issue with office buildings being vacant. We have seen some office buildings get discounted as far as a new buyer buying it almost at 50 to 70%. A lot of banks, including myself, are saying no to office buildings. The underwriting is getting tougher and tougher and tougher. The down payment portion is getting tough. And we're starting to now see a lot of the apartment guys, a lot of the office guys that took those arm rates, they're really starting to hurt now. They cannot float a 8, 9, 10% rate anymore. And so that holding ability, especially when you have no income coming in, that's the key. Zero income or very little income, along with taxes and insurance going up and skyrocketing. It's unaffordable. And this is the reason why you're seeing a lot of news of individuals, big time hedge fund investors, handing back the keys to the bank.
Yeah, man. And when we were talking on the phone and you were telling me how big a problem and basically the increase in what you have personally seen, and
Yes.
essentially businesses handing the keys back to the lender, basically defaulting. I mean, it's really surprising. So basically, just to sum up a little bit of what you said a lot there, man. And I want to make sure our viewers understood. Essentially, you've
Right.
said increase of inventory, you've said increase in vacancy, you've basically said there's an increase in credit tightening, potentially an increase in defaults. Can you go
Mhm.
into, Orlando, a little bit more about, we hear a lot on the news about the forced refinancing, essentially 16% of total commercial loans being due to refinance this year. Obviously, a problem it would create would be it's more expensive to own. They would be refinancing out of a low rate, potentially into a high rate.
Right.
Can you talk a little bit about, the forced refinancing that you're seeing, potentially additional credit tightening? Exactly what credit tightening are you seeing, and can you go into defaults as well?
Yeah, so the forced refinancing portion of it is this. is that you have individuals who are either one of two things. They're trying to take money out of the deal, or for whatever reason, some expenses have come up. That includes insurance, that includes taxes, right? So when you have a big group of individuals trying to take, basically liquidate or cash out that money to pay for those things, you start to see individuals they have to do that 8, 9, 10% versus where they were before, which was a 3 or 4%. Now, can they take out extra money and pay for a higher interest rate? And let's include this. Can they do that if the price of the property has dropped in value? Can they do that? So you come into a situation where they're hoping and crossing their fingers, hoping that the property isn't underwater, and they have to get past, if I do take out this money to pay for things that don't improve the property, insurance and tax does not improve the property, right? So if they're taking those things out, can they afford an 8, 9, 10%? And the answer to that most of the time is no. And so you're coming into those issues, and that segues into the default issue. Now, if you can't refi and you can't pull money out because your insurance and things are getting more expensive, and you don't have enough money to pay to pull money out of the property, what do you have to do? You have to default. You have to give the keys back. You're forced to do that. So that's the reason why you're seeing a lot of these hedge funds and these Black Rocks and all these other big institutional investors hand back the keys, because to them it doesn't make sense to keep the property, because you're going to lose money regardless. So they're giving it back to the banks.
Can you tell the viewers just a little bit about, maybe it's not your customer, I know we don't want to get into any privacy issues, but
Right.
maybe a story that you've recently heard where someone has contacted maybe you or someone because they have to refinance. Maybe it's a small business, they own a facility, they own a warehouse, whatever, and they waited to the end. They waited to the very end to refinance. They knew they had to refinance. Maybe they thought the Fed would lower interest rates, whatever the reason. They waited. They're now in default. They're forced to refinance. But as a result of various things like credit tightening, they can no longer refinance. Can you go into how often you're seeing situations like that?
Yeah, I'm seeing that quite a few. I mean, it's really happening. I don't know. I would say I'm starting it's probably went up about 20, 30% from, a year ago, maybe 2 years ago, when everything was going really good. And I just want to really emphasize that this is just the beginning of this. This isn't like the end or the middle. This is the very beginning of this, where you're starting to see individuals get crushed by credit tightening. And for individuals like myself saying, hey, look, a year ago, 2 years ago, you could have easily walked into any institution, got an appraisal on your property, pulled your money out, and I wouldn't have asked you any questions. I wouldn't have said, "Hey, what are you going to do with that money?" Right? But now what we're starting to see is I'm saying to my underwriter is saying, "What are you going to do with that money? Are you going to improve the property, or are you trying to take money out of this property so that you can leave me with the bag, so you can leave me with the property, and you don't care, you're just trying to drain all of the liquidity out of the property?" And unfortunately, we have a lot of borrowers out there that are investors, and they know the game. They're thinking to themselves, I don't know how much this is going to last. My property right now is
Mm.
50 to 60% vacant. What are the chances that my property will get back to where it was previously? And if they have that realization, they're going to try to go to us or go to any banking institution, and they're going to try to maximize their cash out. And based on what everybody's telling me and what I'm doing myself, is we're not playing that game. We're not playing
Okay.
that game. Banks do not want to take over properties. I know that's what most people believe, is that lenders want to take over properties, but we don't. We just
Right.
want to lend the money. We don't want to go through the foreclosure process. So, yeah, that's unfortunately what's on the horizon and what's happening right now.
And honestly, I mean, it sounds like that's a massive deal. It sounds like they've turned off the faucet of easy cash out refinance money and commercial. So it doesn't sound like a lot of people have the ability to even cash out to reinvest. It sounds like there's a lot more restrictions, but it sounds like an even bigger problem is people can't pull out money out of the commercial
Right.
property because the lenders essentially are worried that they're going to go into default, they're going to hand back the keys, and they're going to take the cash and pocket it. Is that correct?
Yeah, that is the problem. It's just a sign of the times, right? So, some people will try to tell me that they're gonna take the money and they're gonna hold it, and if they're gonna use it on the property, that if anything happens with the property, then they will come in and be able to fix it, and and all this extra stuff. And then when you say, "Oh, okay, well, if that's the case, then how about we take the money that you're trying to cash out and let's put it in an escrow account and then just take your payments out of that." Then the whole story changes. Then it's like, yeah, I don't want to do that. I don't want to lock myself up. And that's what's happening with a lot of the lenders is they're saying, if you don't want to put your money in an escrow account and you telling us that you're going to use it to make payments and to make sure that you're okay, then we're not going to give you the money. We're just
Okay.
not. In the only other way that you will be able to get the money, you have to directly improve the property.
Okay.
You got to be putting
Okay.
a new roof, new siding, all of those things on
So
it.
it's got to benefit the lender in essence because putting money in the property is improving the value of the collateral.
Of course. Of
So
course.
the lender, so that's a huge deal. So what you just are essentially saying, people could do a cash out refinance, but one of the new restrictions, if you will, that you're saying, a recent restriction, is the lenders are requiring that the payments be set aside in an escrow account.
Yeah, yeah. And once again, this is based off of what the investor is telling us they're going to do,
Yeah.
right? If you just come to me and say you want to do a cash out, and that cash out is just gonna, you're gonna you may do something with the do something with a business. You may not do anything with the property. You just want to hold it. That's not going to cut it. That could have cut it a year or two ago, but today that's not going to work because there's such a fog over commercial real estate. No
Yeah.
one really knows 100% what's going to happen. But what we do know is that values are dropping.
Right.
Values are dropping. Income on commercial properties are dropping. Even darlings like apartment complexes and buildings, now vacancy is going higher on those. And what's the reason why? Rent went up high and individuals are trying to save money, and a lot of people are moving in with each other, getting roommates, moving back in with their parents, and they're not putting up with a landlord raising rents by $300, $400, $500. They're not dealing with that. They're saying, you know what, I'll just save my money and I'll move in with someone and I just won't rent, and they will move out ASAP. So even those type of property types that are extremely were just A plus. If you got an apartment complex a couple of years ago, you could easily anybody would give you money on it. Now
Yeah.
it's
Yeah.
no longer that way.
And so, Orlando, what happens after a company hands back the keys, and what process happens next? And for example, how would I be able to, as someone that is wants to be an investor, say I wanted to invest in commercial real estate, how would I
Right.
find those deals, pennies on the dollar? What happens after the keys are given back?
Yeah, after the keys are given back, it just goes through what's called a workout, and the bank will
Hmm.
basically take it into its workout department. And then from that point on, they normally have like a list of investors or people who are interested in buying those foreclosures. And then they shoot out that list of individuals, and those individuals let the bank know if they're interested. Worst case scenario, it goes on the courthouse steps, but most cases it doesn't even get that far. It stops really at that list unless it's a very, very undesirable property.
So, are you able to kind of tell the viewers what you're seeing as far as that pool of investors? So, basically, the keys go back to the lender. The lender has a pool of investors. The list is
Hmm.
given to the investors. The investors decide whether or not to bid on the property. Basically, I think is what you're saying. Can you tell us
Sure.
how good a deals they're getting? Basically, like maybe 20% under value or under purchase price. Could you go into a little bit on what you're seeing as far as discounts?
Yeah, I would say, I don't know, on office buildings, you're probably getting 40%. But you also have to know, you have to understand it's
Wow.
40% of what it was,
Right.
what it previously was worth,
Yeah.
right? Right.
Yeah.
Because you have to understand that when it comes to lending, a lender only cares about getting its money back. That's
Right.
it. I don't care about the value. I don't care about any of that other stuff. I care about getting my money back. If I can get that, I can become whole on that. That's all I care. I don't care about the deal that you're getting at all. Right. But that 30-40% is based off of an old value. And
Okay.
you have to also understand that if that's the old value, then that must mean that income is no longer there also too. So it's a process where if you
Yeah.
buy an office building or you buy a retail center or something like that, you have to understand that you are buying a asset that is in distress and that you will have to put in work to get it to
Right.
where it needs to be. So it's not as easy as buying like a diamond and then still having that diamond. It's going to
Yes.
degrade.
Yeah, I get it. I get it.
Right.
Well, I guess the next obvious question, Orlando, is do you have access to that list?
Well, every bank is different, right? Every bank is different. So, if you call Wells Fargo, you can get on their list. I mean, actually, Wells Fargo, I believe, if you really look at it, they have a foreclosure list, and it's broken down by each state, and you can
For
go search that
commercial.
if you want. Yeah, on commercial and on residential. So you can easily search that. Most banks have it. I mean, it's not prominently on their website. You have to really go look for it. But PNC, all these other guys, they all have it.
Do you personally plan on scooping up potentially some commercial properties additionally
Uh,
to what you already have?
yeah, for sure. I mean, if I see a good deal, I'm definitely gonna buy it. I mean, I'm gonna go for as much as I possibly can, if it's available. But my thing is this: is that just because a property is distressed doesn't mean it's a good deal. You have to go in with your eyes
Yeah.
wide and understand exactly what you're looking at, understand the reason why it's distressed, and if you can bring it back up to where it needs to be to get that value back, or at least to stabilize the property. So it's just not as easy as just going in and buying a property and thinking that it's going to go back up eventually. You're going to have to put in that work, or maybe you do find a deal that someone was a turnkey property and they just so happily fumbled the bag on that one, and on the property itself, and you can pick it up and you don't have to do anything. But that's a needle in the haystack scenario.
Yeah.
And I don't want people to get the wrong idea that you just can go in and buy properties with no work involved.
And so, on a year over year basis, you've seen that list grow?
Oh yeah, for sure. For sure. Yeah. Yeah, I've seen that, especially now. I mean, before the list was non-existent almost. I mean,
Hmm.
I would get a list from a couple of banks in my local area, and it'd be one property on the list. And it'd be like,
Yeah.
and then it'd be a burned down property, or a property that is just no one would want to own. Now you're starting to see, good looking properties on there, but they're you know they've been run down by management, or they don't have that much equity involved because of the income is gone. And let's remember that commercial is really different than residential.
Yeah.
The value is based off of the income.
Yeah.
So if the income goes down, the value goes down.
Yeah. Amazing. I
It's
mean,
just that simple.
y'all are like, as a loan officer in residential, mortgage, we refer to you guys as the wild wild west. The things that y'all can get away with, that it's mind blowing how much more regulation there is anytime a consumer is involved, right? I'm not saying it's a bad
Right,
thing.
right, right,
Really amazing. In Orlando, can you talk into, with your experience, man? Maybe you could, if it's just a rumor, then just bust the rumor. But can
right.
you go into your thoughts on how a potential commercial real estate meltdown would affect residential? How would a meltdown maybe more credit, restriction. How would a meltdown affect residential real estate?
Well, I think you have to look at it from a broad point of view. And the way that I like, the easiest way that I can describe that it would hurt residential is just think of it this way. If you have retail centers, you have businesses, small businesses vacant, going out of business, who's going to want to live in that area, right?
Okay.
That's what brings people to a city. That's what makes people want to live around an area. Well, if you have a bunch of vacancies and you have a bunch of businesses that are going out of business, then you don't have people who pay school
Right.
taxes, don't pay
Right.
property taxes, all these things. Also, people don't want to live there, right? So if all of those things happen and you have all of these big complex Walmarts going out of business or moving out of the town, because that's what happens when business and no one wants to live there anymore. That's where you start seeing the empty Walmarts, the empty Targets, the old, rally burger places and all this other stuff, right? Old Subways. When you start seeing that and no one wants to live in that area, then what's going to happen to the property values in that area? If the reason why areas grow in value is it's a place where people want to live. But if
Right.
you have a bunch of vacancies and there's no opportunity in the area, nobody wants to live there. Think of the easiest way I can describe it is think of a really rural area that really isn't developed, and what do you think the property values are there versus an area that's really built up? Those are two completely different
Yes.
markets when it comes to values.
Yeah. So yeah, it would run down the community, and that would
Right.
affect values. But Orlando, do you think that there's maybe, enough turmoil and maybe enough credit tightening and even enough inventory to, affect the housing market in a way to where it would reduce rent and maybe it would eliminate enough institutional investor demand to where basically what I'm saying is, can we have enough breathing room for the housing market to properly reset without investors just running back into the housing market, residential housing market, and to drive houses prices back up again? I mean, there's a notion, Orlando, you hear it as well. You're
Right.
an influencer. You'll own nothing and be happy. Can you talk about that?
Right, right. Yeah, I would say that there is enough room for that. I mean, we've on even on my channel, I'm encouraging people that if your landlord does come to you and says, "Hey, I'm going to raise the rent by $300 or whatnot," the vacancy rates are so
Yeah.
ridiculous now, right? And when I say ridiculous, I'm comparing it to how it was a couple of years ago, right? A year ago, we could just go
Yeah.
back a year ago. The vacancy rates are so high
Yeah.
compared to that. They've doubled or in some instances tripled. So what I'm telling individuals is that you can say no to your landlord and say, no, you know what? I'm not going to pay $400 extra, right? And you can go down the street and find a better place than you were living in at a cheaper rate or at the same rate. But what a lot of landlords and homeowners, I mean, landlords and corporations are understanding is they can't get away with that, and they're saying, you know what, it's better if I just keep my tenant rather than trying to do that, have that turnover. If I can see that tenants now have the power when it comes to rent, then yeah, that will cause some mom and pop, some institutional investors to think, you know what, there's not enough money right now in the real estate game for me to even take advantage of it. Or what I'm seeing now is a lot of pullback. The interest rates are too high.
Yeah.
They just are. They're too high. The same thing that's happening in residential is happening on commercial. And let me tell you what, it's even higher on commercial because it's commercial.
Yeah.
The
Yeah.
minimum that you're getting on interest rates is 10%, 10%. In some instances, if you got mid credit score, you're looking at 11, 12.
And then it's kind of a shocker to them for some reason. I mean, waiting to the end, it's really surprising to me. I would assume that if someone made it that far to be a commercial real estate investor, that they wouldn't wait to the end to refinance. It makes no sense to me. But Orlando, do you have any intel maybe on the whole STR situation with Airbnb and do you see any credit tightening and maybe short-term rentals, maybe you don't even mess with it.
Yeah, I really don't mess with it, but here's what I can tell you. I get calls all the time about short-term rentals and like,
Yeah.
oh, we're trying to refinance and whatnot.
R-
And this is what I'm seeing from individuals that give me documents and I can see the bigger picture. Is there's a lot of short-term rental individuals out there that are hurting, and it shows in the documents, it shows in the
Okay.
paperwork, it shows in their income. They're getting just demolished when it comes to income. We're starting, especially we're starting to see, first of all, on the one side you have the individuals who are doing that arbitrage stuff, which is just insane, right? Those individuals are getting pushed out of the market, and they're getting pushed out of the market by cities and landlords themselves that are allowing that. They're getting tougher on that type of stuff. And then you have the individuals who bought within the last year and
Right.
are just now are realizing maybe I overpaid. Maybe,
Yeah.
maybe I just maybe
Yeah.
just a little bit that I overpaid. And then they're coming to me and saying, "Hey, Orlando, I need to refinance." And they're giving me the number that the property was valued at that they overpaid a year ago.
Right.
And I'm looking at the numbers, I'm like, "No, that's not what
Wow.
it's worth."
And, and,
That's
and
not what it's worth anymore.
And to reiterate, you develop value in commercial real estate based on cash flow. So
Right.
basically, if the value is lower than it was last year, and this is not on every Airbnb. Obviously, some Airbnbs are doing tremendously well in Hawaii,
Right, right.
beach destinations, but there's an overwhelming amount of Airbnbs everywhere. In residential areas in
Right.
Houston, away from the water, just around Houston, we have about 10,000 units, and to me, that's in residential neighborhoods. To me, it's kind of a shocking number. But Orlando,
Right.
great stuff, man. Anything you can tell. Obviously, predominantly we're talking to people on the sideline. I'm talking to, on my channel at least, people on the sidelines. Predominantly we're talking about investing in residential real estate, specifically a primary residence. There's a lot of noise out there. There's a lot of emotional turmoil, obviously a lot of
Mm,
uncertainty.
right.
Can you go into perhaps what people that are on the sideline should be doing right now?
Well, yeah, on my channel, I say the same thing is that if you're going to sit on the sideline, you should be doing research. You
Yeah.
should be making sure that your credit is in line,
Hmm.
so that when you do pull the trigger, that you're ready to go. You should be making sure that you have liquidity, because this is the thing I'm trying to tell individuals is that you think 6 months ago when you got that pre-approval, you think that's going to uphold now. It's not. It's gone. That first of all, that rate is gone, but the underwriting process is gone too.
Right,
Right, it's
right,
going to be
right.
a whole new situation. So make sure that you have your liquidity together, and not only on top of that, I think the most important thing, and we say it all the time, especially when we do our videos together, is that you have to understand that real estate is based on your location. It's
Yes.
not based, I get it, we're all talking about the nationwide stuff,
Yeah.
and that's great to understand. But I'm seeing a lot of individuals saying, look at Austin. Austin is going down in value. Why isn't Miami? Oh wow, look, Boise is going down or California is going down. Why am I not going down? And
Yeah.
I just need people to really focus on that, because at the end of the day, you're not buying a home in Austin. You're buying a home at wherever you are. So really focus on those things. So I think those are the most important things if you're going to sit on the sidelines, and just make it worth something at the very end of the day, rather than just sitting there hoping. And then when the time comes for you see that house that you've been watching for 8 months,
Yeah.
you see that house and you're like, oh, I can't put in an offer because I don't have the money anymore.
Yeah, man. I mean, I definitely think, though, to clarify, there's different types of hope, right? There's false
Right.
hope, which is essentially just keeping your head in the sand and just hoping for the
Right.
best. And then there's like hard work hope. And I try to tell people, Orlando, never give up hope. But the type of hope I'm talking about is like the responsible adult. People should understand what I'm saying. And again, the hard work hope, right? The harder that I work, the
Mm,
more disciplined that I am, the further that I should go. Right.
Right,
So,
right.
well said, man. I really appreciate you joining us. And guys, don't forget to hop on over to Orlando Miners channel, subscribe, check him out. This is a great man in Orlando. Any final thoughts before we go, sir?
Hey, no, man. Once again, I just want to really thank you for allowing me to come on your
Yeah.
platform, and we speak all the time, so it's no different for us. We would talk about this regardless. It's just being recorded.
Honestly,
You know.
sometimes I feel like the best conversations we have is on the phone, man, and we should just record what we're talking about on our cell phone. I don't. Maybe it's because I get a little bit more nervous when there's cameras and I got to push all these buttons. But
Right,
man, we have
right.
just the conversations, man. I mean, I'm just so grateful because at the end of the day, no one knows everything. So the more
No,
perspective,
not at all.
and especially in different niches like your commercial real estate, I understand a little bit more
Right.
about residential. Iron sharpens iron, man. So just I appreciate you once again. Give it up for Orlando Miner, and if you're out there investing in real estate, I wish you luck and I hope you win.